Well, hello everyone, and welcome to Calculating the Annual Percentage Rates of ETFs. I'm your host, Dr. B. Today is episode 6, September 24th, 2024. And today's ETF is XT, the iShares Exponential Technology Sector ETF. This fund aims to mirror the investment performance of an index featuring stocks from both developed and emerging market companies. These companies are involved in the creation or utilization of exponential technologies. Exponential technologies refer to innovations that grow at an accelerating rate, often leading to significant and rapid advancements. These technologies, such as artificial intelligence, biotechnology, nanotechnology, and blockchain, have the potential to disrupt industries and transform economies by enabling new capabilities and efficiencies. Okay, if we take a look at the graph here, well, the graph in blue, that's what we want to focus on. The fund started on March 19th, 2015. The graph in blue indicates if you invested $10,000 back on March 19, 2015, well, your investment will be worth $25,485. Now, some people may be hesitant to say, well, wait a minute, the index, you'd make $30,597. But the key is to find out, okay, how do you invest in the right exponential technologies? To date, the index is up year to date 18.3%. But in 2023, the investment was up 27%, where the index was up 26.44%. Now, if you look in 2022, the index lost a lot of money. The index actually lost 19.43%. However, XT went down 27.76%. But let's look in 2020. In 2020, let's see if I have a little poker here. Here we go. In 2020, the fund was up 35.26%, but the index was up only 20.90%. So like I mentioned on every video, and I'm going to mention this twice, past performance does not indicate future results. You're going to have funds that are going to be up and down every year. It doesn't. Someday, 1 year's going to be up, 1 year's going to be down. We don't know. I usually see most funds I invest in, they're up 3 years and then down 1 year. That's just how the stock market usually is. Now, what is XT's exposure? Most of its exposure, since it's exponential technology, is in technology, a little bit above 60%, followed by 17% in healthcare, then followed by 5% in utilities, and then nothing, nada in energy, and only a very teeny little bit in consumer defense, 0.28%. Now, exponential technology, there's exposure throughout the entire world. Most of my investments, and maybe most of your investments, are in the United States. 60% of exponential technology in this fund is from the United States, followed by 5% in China and Japan. China and Japan, respectively, and 3.3% in Taiwan. I'm going to get this pointer off here. It's annoying me. Any event, so much for the pointer. I'll get it out of the way. XT has 190 equity holdings, but mostly they're all less than 1% of the entire weight. So there is 109 holdings, but most of them are less than 1%. The only two that are above 1% is NVIDIA and Palantir. Now, what you also want to look at is what happened in the past year. Well, exponential technology has blown up in the past year. NVIDIA is up 163% this year. Palantir is up 137%. Arista Networks is up 95.4%. And the market value in the US dollar. So, for example, the fund managers is invested in over $43.3 million in NVIDIA just in this fund alone. And down here, if you go to, let's say, Taiwan Semiconductor Manufacturing, that's $27.125 million, and that's based upon the Taiwan currency. But it's actually in US dollars. But that's a 72% return so far. But there's not one stock that's taken over this equity. Here, 190 equities. 190, but they're all spread out. If you take a look, these are holdings from number 11 to number 20. First Solar is 0.77%. Same with Eli Lilly. So all of these are around 0.7%. Again, they all have positive returns this year. One thing about Exponential Technology, XT, this ETF does not generate compound interest at all. So we do take the present value, that's equal to your initial principal times 1 plus R, your annual percentage rate raised to a power T. T, of course, is time, but we're not using the variable N. There's no compound interest. So there's less calculations to deal with. Now, does that mean it's a worse investment? Well, it depends. This is exponential growth. So exponential growth does not use a lot of compound interest. It doesn't need to. So that's less work on the fund managers, and they're more concerned about what they're invested in. So again, statement number one is always our compound interest formula. Present value equals P times 1 plus R raised to power T. And then our second statement is, well, let's substitute with numbers that we know. The present value of this fund, according to Morningstar.com, is $25,485. Again, this was based on September 17th, I believe. I did this last week, based on initial investment of $10,000 times 1 plus R raised to power 9.5. Yes, the inception date was March 19, 2015. That's 9.5 years ago. And then our third step, we're going to use division property equality. We're going to divide $25,485 by $10,000. And then we're going to get 2.5485 equal to 1 plus R raised to 9.5 power. And then we want to apply the natural logarithm, otherwise known as the natural log. And we do that to both sides. And we get the natural log of 2.5485 is equal to the natural log of 1 plus R to 9.5 power. One thing about natural logs, the characteristic is the exponent becomes a multiplier. So that's also an application or a characteristic of natural logs. And then if you plug the natural log of 2.5485 in your calculator, you can do it later on, but I'll do it for you. You'll get 0.9355. So that's equal to 9.5 times natural log of 1 plus R. Now again, I'm rounding to 4 decimal places. That's sufficient. But if I round to 0.9355, that means the number after 5 had to be 4 or less. Most likely it's probably less than 4. And then you want to divide 0.9355 by 9.5, so we'll get a much smaller decimal. And that decimal is going to be 0.09847 equal to the natural log of 1 plus R. And again, the 9.5 goes away because you're dividing 9.5 by itself, and that's a 1. I don't need to put the 1 in front of the natural log. And then afterwards, you want to do the inverse of the natural log, and that is called the natural exponent, otherwise known as E. So we E both sides, so now our decimals become an exponent, and the natural log of 1 plus R becomes the exponent. So on the right-hand side, the E and the natural log, those two go away. And again, as you should learn, any number raised to a power of 0 is 1, except for 0. 0 to 0 power you can't do. But any number raised to the power of 0 is 1. And if you're in my math class or if I was tutoring you, you would know why any number raised to the power of 0 is 1. So since this exponent is a little bit more than 0, then the decimal is going to be a little bit more than 1. So you simplify both sides and we get 1.1035 is equal to 1 plus r. And then we want to get r by itself, and we subtract both sides by 1. So 1.1035 minus 1 is 0.1035 equals r. And then many teachers will show you years ago that your variable should be on the left side of the equation. Doesn't have to be. So we're going to add a simple statement here called the symmetric property, which you learned about in algebra or geometry. So that means the rate is equal to 0.1035. And to change the rate into a percentage, we multiply by 100. Therefore, the annual percentage rate is 10.35%. That's of mid-September 2024. Now, we have a little bit different information down below here. This is from Schwab. The performance returns as of August 31st, 2024. Well, it says the XT market value is 10.5% compared to the NAV is 10.6%. Again, very relatively close. I always go by the NAV anyway, 10.6%. Now, why has it gone down since then? Well, September is a very volatile month for stocks. It's always been that way through time. It's a transitional month between summer and fall. People are going back to work. Teachers are going back to work. Some people are coming on vacations. So they need more money. They may have to take money out of the stock market. But nevertheless, always remember that past performance does not indicate future results. Now, this chart here is from the iShares Exponential Technology ETF, XT, and this is on the iShares website. So if you take a look here, from the inception, if you invested $10,000, your fund would be worth $25,684. That's as of last Friday, September 20th, compared to the benchmark or index of $26,361. So since the inception, you're averaging 10.63%. That's a pretty good investment, but compared to the benchmark, it's a little bit higher at 10.95%. But once I always mentioned before, past performance does not indicate future results. So if you want to be diversified, you can invest in this. This fund, I do own it, and my financial advisor, who's a certified financial planner, she's a fiduciary. She does invest this for me a little bit every year. So I don't invest this on my own. So I have somebody do this for me because I invest other things on my own that are also doing quite well. And some of them are doing a lot better. All right, thank you very much for watching this video. I hope this is very informative. Please log on to Be Nice 29, subscribe to my channel. I really appreciate it. And please go back and watch any previous videos like this one right here. Take care and hope you have great investments throughout your lifetime.